Getting Rich Beyond Money. You're listening to Serial Entrepreneur Secrets Revealed. Today we're talking with Noah Rosenfarb. Noah is an incredible individual. He is coming from us with a lot of knowledge about how to really take your wealth to the next level. Noah, welcome to the show. Welcome to Clubhouse. Welcome to the podcast, Start, Scale, Exit, Repeat.
Well, it's a pleasure to be here, Colin. Thanks for inviting me.
I might be in a bit of a challenging internet environment, so I apologize about that if you hear a little bit of background noise. But I'm actually on a cruise ship right now using cellular data. So we'll see how that goes. But that's what Clubhouse is all about. This is what we talk about on Clubhouse. We're just waiting for the room to fill right now. If you're listening to this in podcast, you might not know this, but we do this show every Friday, 2 o'clock Eastern. We're actually in Fort Lauderdale in the cruise area, and you might be hearing the sounds of the horns going off. So a little bit as we go through it here, a little bit ad hoc. And we're waiting for Michelle Van Tilburg to join us as well. She's our co-host. So again, if you're listening to this in podcasts, we are actually a live show on Clubhouse. You can join us every Friday, 2 o'clock Eastern. We do a show Thursdays at 5 o'clock Eastern as well called The Complete Entrepreneur. And that goes into some different areas of entrepreneurship. Well, Mimi, it's been quite a week at Startup Club, hasn't it? We got our 13th award for the book Start, Scale, Exit, Repeat. And we managed to hit our 15th number one best-selling category on Amazon. So we're excited about that. No, I'm going to just kick it off right now as we wait for Michelle to join us. I'm going to kick it off. You and I met, and I was amazed by your wealth of expertise and the way that you've helped entrepreneurs and helped startups. Can you talk to that?
I'm missing the end of your question there, Colin. So maybe what I'll do is, and I see it looks like Michelle may have just joined us. So for those of you listening, I'm happy to just share a little bit of my background. My name's Noah Rosenfarb. I'm a third generation CPA, born in New Jersey, raised in New Jersey, educated in New Jersey, but moved my family down to South Florida about 13 years ago when my second child was born to escape the cold winters. And love to kind of kick it off with whatever questions, maybe Colin, if you're able to reconnect, or Michelle, if you're able to jump in, happy to share what it is you'd like me to share.
Yeah, I'm back. I'm back here. So the title of our show today is all about getting rich beyond money. So, I mean, there's a lot behind that statement. So why don't you just tee it up for the rest of us? So what do you like that? That's also the title of your book, if I believe.
Yep.
What does that mean, getting rich beyond money?
It means different things to different people, but I'd say the first thing that it means is that we have financial freedom. And the kind of the rich part first. And I do have, for listeners that are interested, a list of 26 actions for abundance. They could be found on my website at freedomfamilyoffice.com. Those are the things that I've found are behaviors and activities that people undertake to help them accumulate financial wealth. And once we have financial wealth, that doesn't solve all of our problems. Certainly money solves a lot of problems, but not all of them. And one of the first problems entrepreneurs recognize, especially the first time they have an exit, the first time they generate liquidity, is that money in the bank is very different than predictable income. And the challenge that I encourage entrepreneurs to solve for is how are they going to generate predictable income that exceeds their monthly expenses? And that's really the baseline of what I would call financial independence. So that's where it starts.
It's interesting because I've seen a lot of entrepreneurs sell their company for $1 million or $2 million, and that's it. And they never actually launch another company. You think you're a millionaire, you think you're rich, but you're at that point where you're not making the income and you're drawing down the equity that you've made from your sale of your company. So you haven't quite made it yet, even if you sell your company for $1 million or $2 million. Is that
Yeah,
correct?
I like to say it takes about 10 million to be a millionaire these days because, life's expensive and there's some inflation and a million isn't quite what it used to be. And actually, when you look at the survey data, almost inevitably, even millionaires and multimillionaires, most of them say, I need 50% more money to live the life that I want. So there's this never ending cycle that people could get trapped. into always wanting more. And I think that's part of this rich beyond money philosophy is, well, if you have the 30 or 40 or 100,000 a month or 200,000 a month of predictable income that you want to support your lifestyle, then the next phase is really managing your time so that you're spending it in the way that's most rewarding to you. And that, what we often find is that entrepreneurs, after they sell a business, they can only go on vacation for so long or play so many rounds of golf or have so many meals with friends or sit on the beach and sip margaritas so many days before they really haven't found what's really enriching to them in their life. And so it's important to create a schedule that you can maintain that is really living your ideal life. And there's an exercise that I love to use. Maybe for those of you listening, you might want to just jot this down if you have a paper or pen handy. But it's four simple questions. And I like to do an exercise where I'll buy a lottery ticket and I'll think about, what if I won? What if I hit, 300 million, 500 million? What are the things I would start doing? And what are the things I would stop doing? And who are the people I'd spend more time with? And who are the people I'd spend less time with? And what I've often found when I ask myself those questions is that I do not need more money to take action on the answers. I just need more courage and more thoughtfulness and more discipline. And so that exercise has helped always move me in the direction of living my life like a lottery winner.
Yeah, and I'm just gonna add on here. I love what you're saying. I think of it as like, how do you design your life, right? Obviously, we know having money helps us live the life oftentimes we want, but it's much more than that. And if we think about that other part of it, as you're saying, Noah, then we can actually make a plan. Is oftentimes, probably always, I would say, what helps you reach that goal and makes you successful. So you're saying you have kind of like exercises and plans that people can go through?
Yeah, I have a bunch of tools and different things. I mentioned my 26 actions for abundance on my website. I also have an ebook about becoming rich beyond money that people could download at richbeyondmoney.com. And that just walks you through a little bit of the framework for how to become rich beyond money and some exercises you might do around creating your ideal life. If you go to that URL, I actually have a short exercise, one that we call True North, which is just answering some questions around what you want your life to look like in the next chapter, and then how you could reverse engineer and bring some of that future into today. And I also have a 3-day workshop outline. I'm a member of EO alongside Colin, and I'm also a member of YPO, and we take retreats, once a year. And so I developed a retreat format for people that really want to dial in what their life's going to look like in the future, and a series of exercises that take about 8 hours to complete. But all that's available at no cost or obligation at richbeyondmoney.com.
Now, Noah, I know we've got a lot of people in the audience here who have not even made their first $1 million. And you're a serial entrepreneur. And what is some advice that you can give these young entrepreneurs, these new entrepreneurs, when it comes to creating that wealth?
I see Mimi just pinned in our chat here those 26 actions for abundance. And I think we just alluded to it before. Miriam said you got to have a plan. I've always been a planner. I've always found that planning and discipline provides me with freedom. But once you have a vision of what you want to achieve, it's trying to design how you're going to accomplish it. So, where are you now? Where are you going to be? And how are you going to get there? And those are three questions that I go back to time and time again. Before I was a millionaire, I wasn't a millionaire. And I had set a goal when I was 18 years old that I wanted to be a millionaire at 30. And the way that I wanted to do it was by buying investment real estate and saving as much money as I could while still living a life that felt comfortable enough. And so that's what I did. It took me 12 years, but I made it happen, and it was slow and steady. And, just like a turtle versus the hare, I figured I wanted to be patient.
Yeah, it's interesting that I've gone through an interesting career myself over the last 30 years as a serial tech entrepreneur. In the 90s, it was my first company and that went under. The second company went public and then eventually went under. It wasn't until the third or fourth company that I began to realize that, bad things do happen. And one of the premises of the book, Start, Scale, Exit, Repeat, really, really it should have, no, it should have not been called Start, Scale, Exit, Repeat. It should have been called Start, Scale, Exit, Take Some Money Off the Table, Repeat.
Hmm.
And one of the key concepts in the book is this concept of laddering up your wealth. And because when you do sell that company and you do make that money, you're still not there yet. And you still have to think about how you can get the next company going and the company after that. And we are not just the CEO of one company, we're entrepreneurs. And as entrepreneurs, we need to learn how to harness that skill and learn how to do it better and better again. What I like about your messaging is that it's almost like you're saying, well, once you hit it, you know, you haven't actually made it yet. There's still life beyond that. I know your book, you go into a lot of different areas as well. I'm curious if you wanted to add anything to that. And I know Michelle might have a question, and we've got some people in the audience coming on stage up next, and they'll ask questions as well.
Yeah, I would say one of the key pieces of becoming rich beyond money is having meaning in your purpose in life that comes beyond yourself and your family. And oftentimes, entrepreneurs wait to contribute outside of their business to their community or to causes that they care about or to focus on their family because they just don't feel that that's where they should be prioritizing their time and effort. But once we have that escape velocity of predictable income that exceeds our monthly expenses, now our time is ours to choose what to do with it. And what I've found is that it's very important to either share your experiences with others. That's where I've found my greatest pleasure in writing and speaking. And I see it amongst my peer group as well, as we've become financially independent and successful. We still want to contribute. And the best way is to share with others what we've learned. And I see that true for tons of entrepreneurs. And it doesn't have to be something you wait to do until you have total financial independence. But once you do, it's of great reward. And the other is contributing to noble causes and finding ways to contribute to causes that you care about, that you hold dear to your heart. And they could be religious or nonprofits or wherever it is that you want to make your mark.
I'm glad you talked about this idea of doing it like you don't have to wait till you're successful to do it. That even if you've never even launched a business, I think this is interesting because we can begin to think, we need a purpose. And I think it goes beyond just yourself. It also goes to your team, the team around you. Because if they are part of a bigger purpose, like Startup Club here with Mimi and Michelle, who've worked now almost 3 years on Startup Club, and we've done our best to give back to help other entrepreneurs. The purpose at Startup Club is to really help entrepreneurs, to really help startups be successful and get to that point where they can start, scale, exit, repeat. So, can you talk a little bit more about taking your concept beyond yourself and then broadening that to your team?
I think for a lot of entrepreneurs, oftentimes the biggest impact we can make is on the people that we're employing and the vendors and partners that we're doing business with, our customers, our suppliers, and focusing on that ecosystem to figure out how can we drive value for people that are in that network is going to pay dividends in profits because we're building relationships. And when we contribute to our community, our employees, our vendors, our customers, we're breeding goodwill, and that goodwill often results in brand reputation. It often results in repeat purchases, higher dollar values, better profits. And so there's this virtuous cycle that goes on while we're in this for-profit environment of being an entrepreneur. And so when we exit our business, and it doesn't mean that we have to stop contributing to communities. It may just be that we become part of a different community. And we may no longer be the employer of the team. We may no longer be the vendor to that supplier. We may no longer be the provider in a customer relationship. And so we should seek out other ways that we could contribute because entrepreneurs are often lost if they don't feel like they're creating value.
Yeah, absolutely. Let's go to our audience. Have Richard up here on the stage. Richard is a Try and Intrude Startup Club member. We'd love to hear any questions or comments that you have, Richard.
Hello, everybody. Colin, Michelle, Mimi. No, it's good to meet you virtually. So, I have a question. I'm a business advisor, been doing it for 19 years, and I get clients that are at a stage where they're thinking about selling, yet it's their baby they've built from the ground up. So when someone is at that stage, what have you found from your experience that you share with them to help them make that decision? What are some things that you've found that works in that stage?
It's a significant conversation because there's not one thing. It's not just about the money, but the money's important. It's not just about what you do with your time because your time's important, but it's also about where are you at in your life and are you ready to make this transition? Because going from being a business owner to being someone that doesn't have a business to work on, that can be a zone where many entrepreneurs find depression, and it could be a time where many families break apart in divorce. So you want to really take a holistic and comprehensive look at the situation. You don't want to pass on a great opportunity because it might not check every single box, but at the same time, you don't want to pursue something with vigor just because it sounds sexy and exciting. There's a big dollar sign in front of it. It's really important to evaluate the entirety of an offer, which goes not just to what's the cash at closing and what are the terms of the deal and how much am I going to pay in taxes and how much income will I be able to generate from the lump sum that I receive and how does that compare? Am I going to continue to maintain ownership in the business, either as a controlling shareholder or as a minority shareholder? Or am I going to sell 100% and am I going to work for the employer? There's a series of questions that the owner has to face when trying to negotiate a deal. But I think the first thing to think about is how would my life become better if I didn't own this business? And that's really the first question that we try and get an owner to identify. What is it in your life that will improve if you don't own this business? That's a really difficult question for a lot of owners to answer. They don't know.
And what surprises me is how many people who sell their company, these entrepreneurs, they made millions of dollars and they're depressed. It's like they
Yeah.
lose their identity. So maybe Noah, you could kick it off with your thoughts on that and how we can avoid that as
Yeah, 75% of entrepreneurs report regret after the sale of their business. And when you look at that data, which was compiled by Vistage, the vast majority of the disappointment does not come from the deal itself or the cash at closing or a lack of tax strategy. It really comes from feeling unprepared for the next chapter and staying really focused on price and terms and not as focused on who am I as an individual and how will I enter the world the day after this closing. And, that kind of puts me into a tailspin. So I think, my new book, Exit Rich Beyond Money, we talk about all of the things that need to get done to prevent that regret. But the number one thing, like I like to look at it like Tarzan, before you let go of one vine, you've got another one in your hands. So you should have some passive income that you've been generating before you sell your business. So you know what your investment strategy is going to be and what investment style you like. So you have a feel for how you're going to deploy that capital. And you also know where you're going to find your meaning and purpose. So you've maybe served on some nonprofit boards, or you've done some mentoring, or you've done some business coaching, or you've done, some activity that you feel you get a lot of reward from and you want to do more of it, but you've already experienced it. So you know what you're heading into.
No, I agree with you. I'm glad you brought that up about passive income. That obviously you have a very deep financial PA planning background. But yeah, we see a lot of people that happen to, right? They get the 10 million or whatever it is, then they have to pay taxes, then they help whoever it is that needs help in their family. And then it's almost like, oh my gosh, where did all the money go? But there definitely seems like a point here where you immediately start planning, as you said, that passive income. Or you better be jumping off to another job because it goes, especially if you're generous and especially if you have a lot of bills.
And one of the biggest mistakes I see made is that somebody does have their next idea already lined up because they're going to follow this start, scale, exit, repeat model. And so they know what they want to repeat it with. But The challenge that they're faced with is how are they going to fund that new business? And now they've got liquidity in their bank account. And so they become the de facto investor in their startup. I've seen it time and time again with entrepreneurs that think because they've had one or more successful businesses that whatever it is they're going to touch next is going to be successful. I just had this conversation this week with someone who has a new startup and they've put in an amount of money. I just said, listen, where is your line in the sand where you need somebody else to put money into this business? Where you've got to prove to someone else that this business has created enough value. You've created enough value between the idea that you had and the effort you've invested and the capital you've put to work that somebody else would want to put more money into it. If you can't find anybody else in the world that would want to put in what you need, maybe it should get you rethinking if you should use your own capital that way.
Yeah, I think you're dead on. Like this is something I've seen a lot of entrepreneurs do is they're very successful at starting the business. They got that entrepreneurial instinct. And then they sell their company and now they're in a different situation. They're investing in other companies or they're starting a new company and they're putting it all on the line again. But I often say that we as entrepreneurs have to put on multiple hats. As an entrepreneur, we have to be optimistic. We have to be aggressive. We have to do what it takes to succeed. But sometimes, as an investor, or even when you're looking at your second company, investing in your second or third company, you need to put on your banker's hat. That's counterintuitive to the personality profile of an entrepreneur. Most entrepreneurs we have, but the reality is, it's a whole different ball game when it comes to investing in other people's startups or even in your second startup. Can you talk to that?
Like I said, I think it's important when you put on your investor hat, it's very different than putting on your CEO hat. And, all of us as founders, I'm sure many of us listening are entrepreneurs, heads down in our startup. We're working to make our business go. But when we're in the investor seat, our head's up and we're looking around and thinking about investing capital. We're not thinking about our effort. So we've got to distinguish our return on time from the effort we're investing in our businesses, from the return on capital for the money we're putting to work in our investments. And too many entrepreneurs forget to, piece them apart and they're kind of heads down in their business, investing capital in their business without bringing the investor's mindset to that decision matrix and looking at it objectively and saying, hey, is this really the best place for my money to go? We get swept up in the emotion of our idea and our passion to make our idea become a reality.
You see that classic with sports celebrities, right? How they make a lot of money in a very short period of time, and they're very talented, just like entrepreneurs. But then they try to invest them in the market. I can't remember the statistics, but it was something like 60% of NFL players actually file bankruptcy at one point in their future. It is absolutely fascinating how you can be so good at building wealth or being a sports star, but when it comes to preserving wealth, it's a whole different ballgame. All right. We also have Leo on stage right now. Leo, thank you for coming on stage. And if you're in the audience, you want to come on stage and ask Noah a question, we are really lucky to have him here today to talk to us about wealth and going beyond wealth and how to preserve wealth, thoughts that he has about creating wealth as well. So, Leo, you're on stage. Do you have a question or a comment about this topic?
Hello, Colin. Can you hear me?
Yes, we do. We hear you well.
Yeah.
Okay. Thank you very much, Noah. Thank you, Colin. Thank you, Mimi. And I've had a great time listening to the knowledge you guys have been giving out here. I have a question actually. I live in Nigeria and I have just recently launched an agency that helps people boost visibility, helps executives and professionals boost visibility on their LinkedIn. I actually have an issue reaching out to people, like getting clients on this. And the reason I'm asking this is because here in Nigeria, it's a little different. And I'm trying to leverage the international space even while I'm still here and still see how I can maximize income. So I would like some tips from Noah and, if possible, from Colin too, and anyone who has tips on how I could possibly network with people. I tried networking on a platform called Alignable. I do not know if you know it, but it's strictly for people in the United States. So if there are other platforms, or if I could get one or two referrals, I would really, really want to hear the ideas you guys are willing to share with me on this. Thank you very much.
So I'll share my feedback because I do some LinkedIn marketing myself. And I think I have something like 15,000 followers on LinkedIn, which I've accumulated through a variety of people that have helped me manage my profile. And one of the ways that I met one of the people was because they contributed some thoughts to me over LinkedIn messaging, just saying, hey, here's ways I think you could improve your profile. Here's things I think you should be doing. And they kept providing me with enough value that then I said, okay, let's book a phone call. Tell me what else would you suggest you could do for me, and how much would you charge? And that built a fruitful relationship. I would also say that having a niche, I've always found to be an easier way to start a business. So if you have a target market of certain type or location of professional that's on LinkedIn, I would recommend like honing in on one key area and finding ways that you could bring them value without asking for anything in return.
Yeah, I will also add that I think it's important to try to connect with communities, connect with incubators, connect with organizations. Noah and I were both in the entrepreneurs organization, but they also have a division called accelerators. We're not allowed to promote. We're not allowed to go out and sell services when we're in this organization. But the reality is people come to you. They begin to trust you over time. You're building relationships and trust. And I think that can help you out as well. I'm not too familiar with Nigeria, but I do know that connecting with communities in general, they don't cost you a lot to do it, and it can make a big difference as well.
Okay, I appreciate your answers. I still have one more question, and it's about building the abundance. My question is, how do you actually build this abundant mindset when you're in the midst of a system that actually fights everything you do, especially when it's coming from the government? Because I always use my country as an example, and here, when the government sees that some stuff is really going on well, they actually tend to bring in policies that tend to drag things a little bit, or tend to knock people off the market. How do you stay afloat in this kind of market? Thank you.
I'll share my experience. I grew up in my dad's accounting firm, and we had a small business. When I joined him, it was 12 people doing 2.5 million in revenue. And 9 years later, when I left, we were doing 15 million in business with 70 employees. And we scaled through a variety of means. We went through economic challenges in the US economy, which would impact our business or our clients' businesses. My father would always say, we don't even have 1% market share. So whatever's going on around us is irrelevant to our success. Our success is based on our efforts and our ability to generate value for others. And that's always stuck with me that if I don't own the economy, then it doesn't really matter what's happening with the economy.
I don't have a question. I'm retired.
Well, Jason, we're talking about how to become rich beyond money and how to have not just financial freedom, but also a life that's filled with meaning and purpose, and how you could accomplish that. What I would like to think of as, ultimately a life that you could be proud of.
Yeah, thank you. That's what I teach on. And I'll tell you why. Because Bill Gates came and talked to us when I was working as a co-op at Microsoft Canada in 1998 and 1999. I was there on 7 scholarships at University of Toronto, and I was a marketing associate. And I realized that I had more freedom than Bill Gates
Hmm.
because he basically explained that he couldn't go to the regular airport, Pearson International. They asked him to fly one of his private jets. Now, Bill is not like these rappers that like rent a plane for their videos, right? He just wanted to be able to regular go to the regular airport, right? And as you get higher in wealth, the incremental value of additional wealth decreases. If you offer Bill Gates $5, okay, you know what I'm saying? Like, so that's just an example. So I realized that, wow, here it is. He's living his dream because he wasn't complaining because he did like the fact that he could come and see us as employees at Microsoft Canada, but he liked it better when he could go to the regular airport. I could go to the regular airport and he couldn't. So I realized that I wanted to start off where he's planning to end off. He said he's going to give away all his money before he dies. I started giving away everything for free. So I planned my career in one document. So I minimized expenses instead of maximizing revenues. And I started a corporation that does everything for free. And I've done that for 25 years. So essentially, the point is that you do have to understand your purpose. And that is the long and short of it. It's not how much money you make, it's not anything to do with that. It's what your purpose is. So you have to have a purpose statement for your life, you have a purpose statement for your business, and know exactly what you're trying to do. I was trying to be free. And I think a lot of people that don't understand things, their goal is to be wealthy, but really, the reason why people try to get money normally is so they can buy their freedom. I was already free. And a lot of young people don't understand this. They want to be a billionaire and they don't understand that, you know, Princess Diana died because she was trying to escape from paparazzi, right? Justin Bieber, after the pandemic, I saw him come back from his concert and his first tour after the pandemic, and there were so many women lined up outside his hotel, and some of them tried to jump the brother. He had to get security to pull them off. So you have to understand what your purpose is. If you don't know where you want to end off, you have no business starting. And most people fail because they don't even know what success is. Success to me is freedom. And it's not having money, it's having my freedom. So I have a better life than Bill Gates because I'm more free. My name is Jason, and I'm done teaching.
Yeah, Noah just taking a phone call right now. And that was actually a good reset of the room because we talked about purpose at the beginning. But I'm curious, Noah, I know you're taking a phone call there, but Noah, so this idea of freedom, like the more you work, the more wealth you make, the less free you become. How do you coach your clients on that one? And again, Richard, if you want to chime in after Noah, that would be great too.
Yeah, I think it's around what you want to optimize for. And, for me in my life, I've tended to try and balance all of the things that I'm trying to achieve at once. And I've decided that the fastest path to riches wasn't going to be the best path for me because I wanted to have a great relationship with my wife and my children, and that was going to require my time and effort with them. I really enjoy traveling, and that requires time away from home. And so I've tried to build a life that incorporates all the things that I want, so I never feel the need to retire from it. And again, it was more of a slow and steady build rather than head down, hustle, grind it out, try and make something into an eight-figure exit, and then live my life.
Yeah, and it's really balance, isn't it? Because let's be realistic. I mean, the reality is everybody does want to become rich, okay? And if you use your wealth, there's ways to use that wealth to create freedom as well, okay? It's just sometimes people become so obsessed with the concept, like Jason said, and then they focus on the wealth and creating that wealth, and they lose track of their family, their personal life, their health. All of that goes to the side. And I'm victim of that as well. I'm not saying I'm totally innocent. I'm not standing on stage here and suggesting that I'm perfect because I'm far from perfect. But I definitely can relate to the mental challenges that do occur when you're an entrepreneur and you're building wealth. We also have a gentleman named, and I'm sorry, Ume, if I'm pronouncing it wrong, but we would love to hear from you as well if you have a question for Noah.
I don't know. I'm from Nigeria, so my time over here is evening. So I would love to start by saying good evening, everyone. Yeah, yeah, yeah. Okay. Basically, it's more like, will I say, a contribution to my friend Leo. I guess we're in the same environment, we're in the same country, so we have a whole lot of things to talk about. So when he was asking this question, can you hear me?
Right. Now we can, yeah.
Yeah. So Mr. Noah also talked about carving out a market share trying to make him understand that you've not even gotten even up to zero point 0.5 of the market value with regards to numbers when you want to go down to sales, and it's unfair to regards to your finances, which at the bottom line, everyone is focused on freedom. It's just more like an encouragement from his own end with regards to the policies and what happens here in Nigeria. I just hope you try to encourage yourself so it doesn't affect the mind, because one of the wrongest thing that can an environment can do to you is actually making you grow up or taking over your mindset in such a negative framework, in the sense that you find it very difficult to encourage yourself or to think outside the box. So much failures or so many things holding you back. So it becomes a challenge for you to actually make some strategic steps or grow because of so many hindrances around your environment. For me, I had an issue with the government because I'm full time into real estate. I'm also a sales consultant. I do coaching. I was running business here in Nigeria, and I had an issue with a property I was developing sometime 2 3 years ago, and everything we've done over $1 million came crashing in just a day. The property we were developing came crashing, so it was more like a reset for me. So we had to start again and started having issues with investors. And I understand when he was talking about policies and how it affects business at large. The most important thing with this is having the right mindset, so that even when challenges come, you try to understand where you are, and understanding that the more the challenges, the more is the more advantage it is for on your own end to make more money for yourself. So with that, you can actually have a balanced mindset to actually become not just rich financially, but also have a very rich mind to also help grow other entrepreneurs that are around your space.
America is very focused on the entrepreneur and the entrepreneurial spirit and getting back up when we've been knocked down. And I think you'd find if you polled most entrepreneurs that they would share that they've had times in their life where they've felt challenges and business challenges, challenges that were put in front of them by the government, challenges that were put in front of them by other types of regulation. And, I think the winner's mindset and our fighting spirit as entrepreneurs is that we're going to find a way to push through. And that when it comes to developing an abundance mindset, we get to decide how we're going to think. And when we have those negative thoughts and we have things around us that are happening that appear to push us in a direction that feels uncomfortable, we've just got to wonder where's going to be the gift in this. And so many times in my life, when I've been faced with a problem, I might look at it head on and say, oh my God, this is so terrible. But when I have hindsight, usually something bad has led to something good. And the something good that comes next is usually better than what might have happened if the thing not gone bad. And so I've tried to train myself to think about when I have that immediate reaction to something, oh, this is bad, to look at it and say, where's the gift going to be that's going to come from this? How am I going to learn and grow? And what's the future I'm going to be able to create because this thing happened to me? And maintain my winner's mindset, my champion's mindset. I like to say, not every champion is undefeated. Yes, I've been knocked down and I've had to get back up. And that's what champions do.
All right. So I love where we're going with the purpose. And I just want to talk a little bit about there are businesses that are designed around a purpose. It doesn't always have to be you know, quote, cold, heartless, like entrepreneurial business. It could be. And many of the most successful businesses, especially when you're starting up with all the sweat you have to put into it, sweat equity, I think those are good options too to build a business around your purpose and it permeates into every aspect of your life and your employees' lives.
Yeah, no doubt. Originally, my purpose was to get myself out of the financial situation I was born into, and I was able to achieve that goal and order what I wanted when I went out to a meal. And those were like the types of things that were motivating to me. And over time, my passion and my purpose has evolved, and I've been able to build a business really helping the people that are my heroes, the entrepreneurs that have created jobs and created value and found ways to bring enough value into the world that someone else is giving them an 8-figure exit. They're the type of people that I enjoy being around because I know that they're going to always be creating value in their lives, even if it's not in a for profit sense.
We have Billy Thorpe who's joined the stage. Billy, thank you so much for joining and coming on stage. We're interested to hear your questions or any comments that you have on this conversation.
Well, yeah, thanks for having me. I love the conversation. My wife and I are entrepreneurs. Both of us own small businesses and have been living this lifestyle, is what I call it, for the past 11 years. And we often have this conversation of like, what is this? Why are we doing all this? Like, what does this mean? And so I just thought it was really interesting because I'm at the point in my business where it's doing well. Well, it's actually a newer business, 2 years old, because my other business that I had for nearly a decade went under during COVID. And so I had to pivot pretty quickly. I struggle with the thought of scaling and getting all this overhead and employees and doing the whole thing because I did that with my other company and partnerships and all this stuff. And now I'm living a pretty simple life, part time, doing the thing, making decent income for myself and my family. But I am interested, and this is, I guess, my question if I had to try to put one together that makes sense for you, is what other avenues are you doing to leverage the business cash flow? Like we have cash flow in our businesses and our personal lives. And now we're at this point where I know how to work hard. I know how to create businesses. I know how to make money. But now, how do I make my money work for me? I never really hear anybody answer this question unless it's somebody that's $1 billion in debt and in real estate debt or something. But I'm curious in your guys' lives, like, what have you seen that's worked for you, like to get your money working for you and not necessarily having to show up and even punch your own time clock every day?
I think one of the best investments that I've made is in developing my tax strategy. I'm a third generation CPA, so that is something that maybe came more naturally to me than might come to others. But I think too many entrepreneurs rely on their accountant to tell them what their tax situation is, and they don't necessarily pursue their own education to find out how can they put themselves in the best tax strategy. And when you can reduce your tax exposure, you just have more money to decide how you're going to utilize it. So we have a client in California, he's paying 49% of his income to the government. And so now, with the changes in structures that we're helping to develop for him, he may be able to reduce that by about 40%. So think about all that money that's going to be able to go back into his pocket, which he could then use to either invest in his business, if that's his highest growth and best opportunity, or if he wants to diversify, he can move into other asset classes. For most entrepreneurs, the best investment is in themselves and in our own education, in our own training, and then in our own business. And if we can invest in someone else's business at a higher rate of return than we can invest in our business, we're probably better off selling our business and investing it elsewhere. But there comes a time where we have too much wealth concentrated in our business. I like to say concentrate to create and diversify to protect. I would encourage you, if you're thinking about where to invest your capital, figure out how to invest that in yourself, how to invest that in your business, until you're ready to diversify away.
Excellent. We have about 10 minutes left. And I think, Noah, since we have you here, you're not only a tax expert, you're also a serial entrepreneur and you're someone who can help entrepreneurs build wealth beyond just the financial side of it as well. In the book, Start, Scale, Exit, Repeat, there is a central premise around laddering up wealth, that entrepreneurs are simply tradespeople, Billy, that we as individuals, we can create companies as long as we can learn the trade of entrepreneurship. We can do it over and over again. And I've done it myself 12 times with very successful companies. The fact is that you can generate a lot more wealth through laddering up your wealth by, and this is one of the key points I make in the book. It's not the key point, but it's one of them, through capital gains versus that lifestyle business. And Noah, we have a friend, and he's mentioned in the book, Goran Dragoslavic, who has 1,000 homes in Fort Lauderdale. What I'm saying in the book and what my premise that I've laid out is that this is the way that I tend to lean, which is to start a company, scale it, exit it, and then repeat that over and over again, get the timing of the exit right, maximize the value, and then pay that capital gains rate. So, but I'm also in a world of tech, in a world where we do subscription businesses, a world where we with Hostopia, give you an example, in 2006, we sold that company, and it was a publicly traded company, and we paid 15% capital gains tax. At the time, Noah, we were paying 36% plus the state, so 5.5, so about 41% corporate tax on our earnings. And when I did the math, it was like 30 years because we sold the company for 17 times EBITDA. So when we do the math from a capital gains perspective, you almost have to make double the amount of income to match the capital gains, and it would have taken over 30 years to do that. And by the way, we closed it a month before the Lehman crisis, so that's a whole other side of every selling and exiting, and why I encourage entrepreneurs to think about this and to reframe their brains and to think of themselves as entrepreneurs, not as a CEO of one company. But since you're the expert, Noah, this concept of building capital gains versus cash flow. I do the opposite now. Here's a guy who's a capital gains guy. I've done all these businesses, and I've now have 20 properties in South Florida. They're Airbnbs, and I have a lot of income-based funds. I even tell my stock at Merrill Lynch, I tell them not to do tech companies. It's just more conservative stuff because I live in a world where I'm already doing all that. I'm focusing on
Yeah.
those capital gains. But this concept of starting, scaling, exiting, taking some money off the table, paying a lower capital gains rate. In the United States now, it's 20% for LLCs, 23.8% or whatever for C Corps, and even in Canada and other places around the world. It's a much lower tax rate. This concept of doing that and then repeating that over and over again, what is the good thing about that strategy and what is the bad thing? So we're going to get a good and bad from you.
Yeah.
Well, the bad
In
is
creating
when you sell the
liquidity,
company, you don't have
paying some
cash. You
tax.
don't have cash, or you don't have cash coming in,
Right.
right? So you're like burning down your equity.
Right. Well, the counter to that is the buy, borrow, die strategy. And that's a strategy for people that want to continue to own their company. And often, what we're looking at, let's say an entrepreneur has a good cash flowing business, they're making good income. And the challenge that they're faced with is they obviously have to pay tax on the income that they're generating out of that quite healthy business. Well, what we might want to do is figure out how can we reinvest in that business so that we get offsets of their income. And that might be through purchasing equipment and using depreciation. It might be acquiring competitors. And through the acquisition, we're generating depreciation that can offset our purchase price and essentially reducing our income on the income that's generated from the business. But if we need money to buy something, we just borrow it against the business's assets. That's a non-taxable event. And if eventually we die owning our business and still owing the money to the banks, our heirs would not have to pay any capital gains tax when they sell the business. We get a step up in basis. They could sell the business, pay no capital gains tax, and pay off the loan.
Yeah, we hadn't even gone into the whole concept of trusts and setting up a trust. We got a couple of minutes left. Maybe you can just share with us, what are some of the best practices for entrepreneurs today in America?
I would say the first thing to consider is your asset protection strategy because that's more important while you're alive. So if someone were to sue you, if there was if you ran over a bus full of kids on your way home from work and you were drunk and, now they're going to sue you for all you have, how do you protect yourself from that type of a claim? And, it doesn't have to be as dramatic as of an accident as something like that, but there may be an issue in your life that causes someone to come after you and sue you. And so you want to make sure your assets are protected. People that want to protect their estate from taxes have the ability to do so. I think of the U.S. estate tax as an optional tax. You can plan around it. Right now, a married couple can give about $27 million to their beneficiaries, all estate tax free, but everything over that is taxed at 40%. So if you don't want your heirs to pay that tax, you've got to make sure you give those assets away to a trust prior to them being worth $27 million or more. And so for many people, especially before they've accumulated significant wealth, they can develop their estate plan. The most common strategy that we see for married couples is referred to as a SLAT, SLAT, which stands for Spousal Lifetime Access Trust. And this enables them to continue to access their money while they're alive, but still ensure that their beneficiaries would pay no estate tax. So again, for most entrepreneurs, I would put asset protection planning ahead of estate planning in terms of, as you're building your wealth. And I also think about income protection and life insurance as probably more meaningful steps for early stage entrepreneurs to take. If you're married, if anybody's relying on your income and something were to happen to you, can you put yourself in a position to protect those family members? And either by having some life insurance in the event you die unexpectedly, or disability insurance in the event something happens and you're no longer able to work.
All right, Michelle, there you go.
Problems with the app today. But yeah, this has been a great conversation. And I think, Noah, there's so much to go into, as you said, in these planning phases, especially financial. But we all need to think about designing our businesses and our lives, as Noah has said, so that we're not just living day to day in drudgery trying to make that buck. We're getting where we need to be, and we're designing a life beyond our goals, our financial goals. So thank you, Noah. Can you tell us the name of your book again and where we might get it? And if you have a website, just if you could say that again, that would be great, so that people can look into what you're saying here and dive in deep, because I know you have a lot of tools for people to use.
Sure. So I have a new book coming out called Exit Rich Beyond Money. If you search my name, Noah Rosenfarb, or Exit Rich Beyond Money on Google or Amazon, I'm sure you'll be able to find it now. The book's still getting edited. And I do have a lot of free resources. So you could go to richbeyondmoney.com, where I have a short ebook that you can get at no cost. Also, for those entrepreneurs that might be considering an 8-figure exit, I've got a book at eightfigureexit.com that just tells you some things that you should be thinking about before you list your business with an investment banker.
So, are you still practicing financial advising and CPA accounting practice?
So I'm retiring from my family office this coming December 31st and leaving that in the capable hands of my team. And I'm investing all of my effort in business focused on tax strategy for entrepreneurs. So we don't do any tax preparation. We don't do any financial statement preparation. We just help 7-figure income and 8-figure net worth entrepreneurs develop their tax strategy. And that's going to be a new business that I'm launching soon. We're still working on the name, but right now, all that work has been done inside my family office, freedomfamilyoffice.com.
All right. So, we can follow you on freedomfamilyoffice.com. And I think I'm going to definitely get your book. I'm very interested to see what you have to say, dig in a little bit deeper. So, thank you for joining.
Thanks so much
Yeah,
for having me.
and I also feel like we could do a whole other show on how entrepreneurs can set companies up early on to minimize taxes going forward. Like, for instance, with paw.com, we set it up as a 1202 eligible stock. We don't pay any taxes through for the first $10 million. It's tax free on capital gains. Like, there's all these things that you can do to set your business up, and we never even talked about that. So I feel like we
Uh,
have to have you
no,
back. I feel like we have to have you back for that,
I,
because we totally
no.
missed that.
And by the way, Noah, that's something that Colin discovered on his own. The accountants and advisors didn't tell him. So I think, there's information out there that people may not be aware of that they can think about when they're setting their company up. It's not always do it as fast as you can, like do a C Corp.
Right. Yeah, terrific. Well, thank you for having me, Colin. I hope you enjoy the cruise if that's why you're at the port terminal. And I
Yeah, yeah.
appreciate everyone listening, and I hope you've got some value from today's conversation.
Absolutely. Thank you very much, Noah. You've been listening to Start, Scale, Exit, Repeat. If you're listening to this in podcast, we were a 5-star rated podcast. Please give us another rating. And also, if you haven't already done so, go to startup.club and sign up to the email list. We come out with a publication once a month. Last month was our second publication. And we came out with the TTSI score, which is a time to sell index, which is an empirical score. And by the way, it's very low. Noah, it's 3.6 out of 100 right now. It's one of the worst times you can potentially sell your company right now. This is a time to buy and build. That's the market that we're in today. Thank you very much. We'll see y'all next Friday. Friday, 2 o'clock Eastern.
Bye, everyone.